In this bonus video, we'll focus on something entrepreneurs often forget: your rights as a taxpayer. These may be explicit or inferred by the limits provided by law. We will share simple, relatable scenarios for you to grasp the rights. I am Calverwell, and I help startups and SMEs make sense of tax early, giving them the control and confidence to focus on scaling their businesses. Yes, ZIMRA enforces tax law, but the same laws also protect you. And knowing these protections can make the difference between panic and confidence when you are dealing with an inquiry, an audit, or even a dispute. 1. Right to clear notice. ZIMRA must issue a clear notice when they come to request any information. For audits and investigations, this notice must be written. Scenario: you run a small manufacturing business with 2 branches. A ZIMRA officer arrives unannounced, demanding full access to your accounts. Legally, they must first give you written authority and specify what tax heads they are checking. You are entitled to request that notice before handing over documents. This prevents fishing expeditions and ensures transparency. 2. Right to retain and present records. The Income Tax Act, Section 37, says you must keep full and accurate records for 6 years. This provides for a timeline in which you must keep financial records, as well as place a limit to prior period archiving. Scenario: you run a tech startup exporting software. ZIMRA questions your zero-rated VAT claims from 3 years ago. If your invoices, bank statements, and RBZ acquittals are in order, you're covered by law. They cannot demand records older than 6 years unless fraud is suspected. This right protects you from endless fishing into ancient history. 3. Right to object and appeal. Under the Income Tax Act, Section 6.2, if you disagree with an assessment, you have 30 days to lodge an objection. If you are still not satisfied with ZIMRA's determination, you can appeal to the Fiscal Appeal Court. Scenario: you run a retail group. ZIMRA disallows some of your input VAT claims, raising a heavy assessment. Instead of paying immediately, you can object in writing within 30 days. If disallowed, you escalate to the courts, where an independent body will decide. This is your shield against unfair or incorrect assessments. 4. Right to payment plans. The law allows ZIMRA to enter into arrangements for payment of arrears. As noted under Section 7.1, ZIMRA has the discretion to allow or disallow your proposed payment plan. What we have seen in practice is that a payment plan that pays at least 30% of the tax due immediately and does not stretch to 6 months installments is accepted without much negotiation. Scenario: you own a logistics company with contracts across the region. Cash flow is tight because clients delay payments. ZIMRA demands $50,000 in payee arrears. You have the right to request a structured payment plan with ZIMRA Debt Management Office. This keeps you compliant without destroying cash flow. 5. Right to confidentiality. Under the Revenue Authority Act, ZIMRA must treat taxpayer information as confidential. Section 5 of the Income Tax Act demands that ZIMRA preserves the confidentiality and secrecy of taxpayer affairs. Scenario: You run an agro-export business. You're worried ZIMRA might share your turnover details with competitors or suppliers. The law prohibits them from disclosing your information except for legal proceedings. This right builds trust in the system. 6. Right against excessive penalties. Penalties must be based on rates imposed by law, not on arbitrary figures. Scenario: your startup delays submitting a return by 10 days. A compliance officer threatens to shut down your business. The law specifies fixed penalties and interest, but ZIMRA cannot invent penalties outside of the law. You can request the calculation breakdown and challenge excesses. 7. Right to representation. You are not alone in disputes, and the law allows you to be represented by an agent, an accountant, or a lawyer. Scenario: you run a family-owned group of companies. ZIMRA begins a multi-year audit. Instead of personally attending every meeting, you can appoint your licensed tax agent to handle correspondence. This keeps the process professional and less stressful. 8. Right to refunds. Taxpayers are entitled to refunds under the tax laws, some due to the nature of their business, others as a result of applying the tax laws to their specific scenarios, which make them eligible for refunds. Scenario: you export horticultural produce, have been claiming zero-rated VAT, but ZIMRA delays refund for months or even years. By law, once verified, refunds must be paid. You can escalate delays formally and even litigate if ignored. This ensures fairness in cash flows and application of the tax laws. 9. Right to fair enforcement. The Income Tax Act allows ZIMRA to enforce collection through garnish orders and civil recovery. However, enforcement must follow due process and may be challenged through the courts if it is excessive or irregular. Scenario: you run a retail chain with 3 outlets. You fall behind on payee and ZIMRA issues a garnish order freezing your bank account without prior communication. ZIMRA may recover tax this way, but if due process is not followed, you can challenge it in court or negotiate a structured payment plan. Rights mean nothing unless you use them. Keep your documentation sharp, demand written notices, file objections on time, push for payment plans when needed, use representation when stressed. These are not loopholes. They are legal protections designed to make tax fair and predictable. Tax is unavoidable, but in Zimbabwe, the law gives you tools to manage the process fairly. Follow the rest of the Startup Tax series and download the guide for a deeper step-by-step on taxpayer rights and remedies.